All right, awesome. Okay, today
we didn't even know we were talking. Awesome.
Yeah. All right. So today, James Christoph, that is his pseudonym on Twitter. Somebody who I've been chatting with for a while, and an in-person podcast, which I think are the best. It's the best opportunity to really chastise different.
We can get our cynicism on here.
Exactly. We can really get into the weeds here. All right. So traditional financial background. Introduce yourself to the extent you want. We're both anonymous here, obviously, but
yeah, totally. So I kind of gave you like a little bit more background off mic, but like for everyone's benefit, TradFi for like 12, 13 years, mostly in like the structured finance, structured trading world on the sell side, kind of like a deep market in equity derivatives and structured lending, like that type of stuff.
Awesome. Okay, so what did we hop into yesterday? Big announcements on Sol DATs. We got to talk about. Well, let's talk about DATs in general.
Yeah,
I've heard you. So I listen to you sometimes. You're like a recurring guest on
0x guys. Yeah,
with
shout out with
Boccaccio, the most
He's a good guy.
unserious but lovable, podcaster out there. Okay. What is your like overarching view on DATs? I feel like you've been quite critical and I want to hear it.
Yeah, I think like, how do I start? So I think like you have to start with like MicroStrategy, which, we were talking about this before. Like, I think it's very much its own unicorn. Like, and the thing that Saylor did that like I think is different is like he took a gamble on a very failing company that like he needed to turn something around, and he did it in like the time of the market where it was like, I think much riskier, right? With like price and where it was then. And also just like the way he structured it, like you have to actually give it to him, like give him credit. Like he did it super well. So like I immediately like disregard anyone who talks about like MicroStrategy blowing up. Like it's just not going to happen. Like it's just structurally, it's impossible for him to do that.
It also blows up everything. Like I don't think this really dawns on people. Like when people talk about MicroStrategy blowing up and then I don't know, like whether or not this is a systemic risk. I'm like, it is a systemic risk, but like it is so decimating for at least some period of time that it's like almost
like if Saylor ever calls,
like, who cares?
If Saylor ever calls like a couple deaths, is like, I need a TWAP of like half my position over the next like 6 months. It's like, all right, like I'll see you in 5 years. Like, back it up, have fun.
Well, the thing is too, like, and honestly, I got to give like massive shout out here to one of the most polarizing and at times I find also deplorable, but one of my friends, Udi, is like he's been talking about this for quite some time, which is that it is just now dawning on crypto people in the past 6 to 9 months what Saylor's been doing for 5 years.
Yeah.
And like the degree to which he's been doing it, right, is like everyone right now is just, salivating over issuing equity to buy tokens, and Saylor has exotic derivative upon exotic derivative, and it goes down the list. So right?
Like the funniest thing also is like everyone always talks about how like we're just speed running traditional finance. Like he knew the game to begin with. It's like my goal is to become as systemic and as important as possible so that I can't fail. Like that is it. Like if you ever thought like backroom deals were bad in like 2021 to like prop up the market, like I have to imagine if like there was ever something that was actually going to happen with Saylor, like that problem will be fixed.
Yeah, you would hope, at least with this president, maybe. But like the thing, so to that end, so then okay, moving on, we get SBET, we get Tom Lee. Lubin would seem to be like the second to pick up on this, but Tom Lee like quickly sort of, I would say, took his steam. That, I mean, what do you think of the current, like ETHs? Like, what do you think of the current, like?
Yeah, so shockingly, you can imagine, I think they're pretty silly. I think like one, there's like a very unquantifiable lindiness of MicroStrategy, and it's like it ties very nicely into Bitcoin. Like Bitcoin is unique, Saylor's unique. Like nothing that Saylor says is one like purported to be grounded in reality. Like
for sure,
it's cyber hornets, it's all this stuff. Like fucking awesome, sold. Sorry, I don't know if I can curse, but yeah, awesome.
It's a podcast, dude. Yeah. It's not the news.
All right. And then like Tom Lee's like version of that just seems really cheap to me. Like it's not. It's one. It's like
okay. Well, like one thing is that I don't. Somebody who was it? I think. Do you know this guy Moon Overlord? He was one of the few people who mentioned this on Twitter, which was like, there is a lot of memory holding of Tom Lee prior.
Yeah, totally.
Like Tom Lee.
It's like people in TradFi, like I know Tom Lee. Like everyone's got like CNBC up, and like every once in a while Tom, and like to his credit, Tom Lee has been right because he's perpetually bullish, which is like great, right? Like if you've been long tech for the last 10 years, like you've had a very good time. That doesn't signal any deeper intelligence to me, right? You know what I mean?
he's a born bull poster. Apart from that, like
yeah. So like I guess like one of the examples, like I think I talked about it on like one of the 0x podcasts last week. Like he has this chart of like 54x whatever. I actually don't think that's that bad because it's funny and like it gets people talking. What I think is actually bad and deleterious for their narrative. So there was like a Bankless podcast with him and shit, I forget the guy's name. Used to be a BlackRock executive.
Watch this,
he's now he's at SBET. I think he's the chairman.
Yeah, I know who you're talking about. He was at BlackRock and went to leave to go. Yeah.
So I figured it was David Hoffman or Ryan Sean Adams talking to him, and he gives this like explanation for like ETH is this settlement layer, and like it's very technical. And I was like, all right, so for every $2 of stable coins we onboard onto Ethereum, you increase like roughly $1 of Ethereum value, and like extrapolate that, it's worth like $80 trillion. So I think like one, like prima facie, that's like stupid, like dumb. But then like when you start to try to sell that like really like mathematical, like almost equation like narrative to people, I think you completely lose them.
Yeah, I have seen this, and also I sympathize with this because like what you were saying with regards to Saylor, it's like this is the most pristine asset ever created. It should be worth hundreds of trillions of dollars. It's like, all right, there we go.
Don't like the second you value something on like a DCF, you lost.
Yeah, but even like the stablecoin stuff is like very clearly not true. Like I'm sorry, but like Tether and Circle can issue the world's GDP times 100 on Ethereum, and it totally uses this constant thing about, you know, they run their own node. You don't even like simplify it more than that. They have the money in their bank account. If they don't redeem it, they don't redeem it. Yeah, we don't need that's all that matters. It doesn't like none of this. So like, and that was one of the like there's another, you know, theoretical model right now for Ethereum, and which is precisely this, which is that definitionally the economic security must be at least that. And it's like, dude, no, it doesn't.
It's like not how this works. Yeah, totally.
It's like, what is the economic security of like your Wells Fargo branch? It better be exactly how. Like, it's obviously incorrect.
Like and also like another thing with if we're talking about like stable coins and stuff, like this whole idea that like keep hearing the stat of like, you know, more volume was settled on stable coins than like Visa last year, and that's like this huge growth narrative, right? And it's like that's not the same thing, because like a market maker sending Tether back and forth,
right,
is not like volume on Visa, right? Like payments, that type of stuff.
Yeah, no. I agree. I tend to agree with the with like the read on like why not just Tom Lee just say it's a better Bitcoin? Totally. Like that's fine. Like just it's a better Bitcoin. I think that's a better narrative. But anyways, from when these like, so when did these kind of first come into prominence? Like 2 months ago now?
Yeah.
Like what have you seen in terms of the trajectory? I mean, the MNAVs have fallen
precipitously, right?
But
so they kind of had like, so SPET, BMNR, they had like their first initial pop. Then they had their first kind of like hiccup where everyone kind of, I think, preemptively said it was over. And then like he had like kind of a second life to it. And now, I don't know what it is now. Like SPET and BMNR are probably what, like 85 maybe? The slight discount. I didn't look at it this morning.
I think the one thing, and I was saying this before, like I've been talking to Udi about this forever, because like this is, I mean, he's been pretty spot on about this specifically, because he was following this, what's this Twitter thing called? Like MicroStrategy, the group of like 40,000 people. Like there's like there's a MicroStrategy, what's it called? Irresponsibly long. Okay. This is a group of like 50,000 people who not a single one of us on crypto Twitter has ever seen, and they are just like
good long master.
Extreme irresponsibly long MicroStrategy, and they have been talking about all these dynamics for 2 years now, 3 years now, and like he's been bringing this up. But one point that he has brought up, which I think is at least interesting to consider, is that, and I feel like it's kind of funny. These things can trade at a discount, and they can just trade at a discount. The idea, of course, is that you restart the flywheel, right? Yep. The irony is that I think people are more afraid of some of these, you know, as you go down the market cap list assets when they start to trade at a discount, because they're like, oh, I don't think the flywheel is going to restart. Strategy throughout the bear market at times traded below MNAV. Or traded below NAV.
Yeah.
So I don't know. Like, when you look at this, like, do you think that these could kickstart again?
I think two things. I think one thing that made MicroStrategy survived so well is that he did not sell to restart the flywheel
completely.
He was just like, fuck it.
I'm not selling.
He's like, I'm not fucking selling. Yeah, exactly right.
Yeah.
He's like, this sucks. Whatever. It's going to come back fine. Clearly, like, I think if you're being intellectually honest, no one in like the ETH DAT space now is a true believer. And I think they will certainly, like, if the discount gets big enough, they will certainly start selling ETH to bring that premium back up and like to get the more ability to sell shares, right? Like, there's just no way.
Yeah, I think that sounds right. You saw that Tom Lee. Okay, so explain this to me from a bit of a TradFi background, like, because this is my read on it being much more akin to an actively managed hedge fund, which we're going to talk about more in a second. But yeah, dude, he invested in a WorldCoin DAT.
Yeah, fund of DATs. Yeah.
What is that like? Was that within the understood mandate of, hey, I'm going to go out and use this Bitminer to buy ETH?
Well, I think the point is
WorldCoin's not so bad after all.
I think the point is like, one, there is no mandate. It doesn't really matter.
That's okay. So that, yes.
And he actually made one mistake of many, I think, on Twitter. He like got into it with someone.
I know.
And like, when you go to that level, that's not a good look to begin with. But he's like, this guy doesn't like making money. And it's like, okay, wait. So like, you can't on one hand, like, you can't maintain this contradiction of like, all right, ETH is this pristine fucking asset that's going to save the world and it's going to have like world GDP on it. At the same time, like, I'm day trading like Sam Altman's eyeball coin.
I know.
Yeah, it's like why are you doing that? Yeah, yeah. It's like, what's next? Like, you're going to buy like the Swede DAT or like the AVAX DAT.
I know. So that, like, that doesn't instill like a tremendous amount of confidence in his confidence in a single asset, right?
Totally.
Yeah. So, okay, like, along this vein of like actively managed, and this comes back to now the initial question with regards to, we saw a bunch of Sol DATs launch. Sol was like, clearly, you know, we got to catch up here, right? So Samani was the most recent and the biggest. Talk to me though about your view, and we were kind of talking about this before, as to whether or not this capital that exists in TradFi can all of a sudden start degenerating in DeFi and generating yield in these sort of increasingly exotic ways. Like,
yeah, so like, I think it's interesting. Like, I think interesting is a good way to phrase it. I think like if you're being like objective about it, like, we're just porting over hedge funds and wrapping them in a different legal structure.
Yes.
Right.
Yes.
And I'll start with like why I actually think it matters. So like, you know, 99 times out of 100, when people complain about like financial regulation, like, I get it. Like, I don't care about the 800th disclosure on like a PPM like buried in it, but there are certain things that I genuinely do think like actually matter for protecting people. So like, if you look back at like 2020, 2019, like, as soon as like Celsius and BlockFi started, those were clearly unregistered securities and like hedge funds operating. And like, had that stopped before, like, you know, the world would look very different. I'm not saying that's the same thing. Yeah. Now it's not the same thing at all. But I'm saying like some regulation does actually make sense. I'll probably get crucified for saying that.
No, but also the thing about like, when you're spot on, because it does, the analogy is like I agree. It's not set us up for a good future here, because the thing about Celsius and BlockFi is they literally put on just like a good UI that looked clean and looked professional. Totally. And they were literally
behind the scenes
doing
spreadsheets and shit.
We were doing with Curve and Convex in like all of the most obscure Ponzi games.
Or they were just like sending it to who's the 0x wallet. I forget who it was. The guy that we found out for Celsius. It was just one guy managing.
Yeah, exactly. His name, and like lending it out to the most, you know, they lending it out to guys who were doing the same thing. Like, totally. It was turtles all the way down. So yeah, I mean, I guess. Go ahead.
So like I definitely, clearly, I'm not saying that's like what anyone's doing now.
Yeah.
I just think of it in terms of like, I don't know that that's like the right path forward, is to just raise like hedge funds traded through wrapped vehicles that kind of like bypass the need to register them as funds. Like, whatever. I'm not going to like be the police and, you know, call the SEC on things.
But if they're listening.
Yeah, but if they're listening, let's go. I just be curious like what they're going to do. And I think I always my ears perk up whenever people in crypto use the word arbitrage, because like it's one of those, like, you keep saying that word, but I do not think you know what that word. The word does not mean what you think it means.
Yeah.
Like borrowing from TradFi with like your Solana and then like putting it in DeFi, like, it's not an arbitrage, right? Like, that's Arbitrage implies
it's
like
just increased risk.
yeah, exactly. It's just like I'm borrowing on something and I'm YOLOing it into something else on chain. So like my concern is like that type of stuff starts to happen, and then you're like DAT 3 or 4, and you're like, oh shit, like what can I do? It's like, oh, I see that guy's in like XYZ lower risk, like borrow lend. I'm gonna take more risk and lever it up, so like people come to my DAT because I'm paying a bigger yield.
Is there anything that prevents that flow of money? Again, I'm not necessarily, for what it's worth, neither of us are like snitches here. I'm not making any judgment like, okay, do whatever. I'm probably just going to stay away from DATs because I don't think I have an edge in DATs. So I'm going to stay away in general. But is there anything legally preventing them from getting money in TradFi and deploying that on chain? Like, is there any type of barrier right now?
The only thing I was looking at, I was spending some time last night. So like under the Investment Company Act, basically, if you have more than 40% of your company's balance sheet in securities, you're required to register under the Investment Company Act. So like that's how Saylor gets around it because Bitcoin is not a security.
Interesting.
Right? So this is the thing I asked in a few chats last night. I didn't get like a really good answer. One, like Solana is not a security, fine. But this goes back to like, this is like super nerdy. The fourth prong of Howey, like you can turn things that are not securities into securities by actively managing them, right? That's how like an orange turns into security through Orange Grove. So like if you take a non-security that's Sol and you put it into a DeFi vault, does that make it a security? I don't know.
Interesting.
And then I don't know what percentage of their portfolio they're going to do. But is it going to be above 40%? Like these are super pedantic things, but like I'm fucking nerdy, so I spent some time thinking about it.
Even the staking premise in general. I mean, and actually this applies to ETH. Any DAT, I suppose it's really not Bitcoin, right? Like the at least intention. I guess this is already the case with a lot of the ETH that they're entering the staking queue, or they have some deal with like one of these what is it called, like alluvial or like that. So that's one. Like, what do you think of that? As well, dude,
you could make me crash out for the next like 2 hours because we've like, dude, my fucking the hill that I will always die on is like LSTs are so stupid. It's like you should be trading something to get the yield. Like there should be a trade off. The idea that I'm just putting my ETH and locking it up and getting staked ETH and like everything's fine and there's no trade off, like shouldn't exist, right? Like,
I know.
Like, it should, it should depeg, or like there should be a problem.
I mean, I stopped dying on this. Okay, so I
don't care about that anymore.
I came at it from a different perspective though, and I said this stuff like 3 years ago when there was should it be called an LSD or an LST? Yeah. And my point, which was I really did. And whether or not it's clearly not relevant, but I came at this from what I thought was like a first principle point of view, which was, okay, let's like take Bitcoin. Let's look at how proof of work works. Okay. A miner is plugging in, has to acquire energy and has to acquire a computer and actually has to do that work. All right. If you apply this analogy to Ethereum, when you use a staking provider, they are doing that work for you. They are quite literally doing the work for you, right? And so, like, I was like, this is
100% rewards to validators.
Exactly. Is it so I had the same like, but so that was only sort of tangential. That was more from me looking at like this looks a little bit like a security, but then it's like, okay, no, this is like decentralized middleware, and I was like, okay, if you say that's fine, that's fine. But to your point, you're right. If like it shouldn't be the case that staked ETH is functionally the exact same. Like there should be some risk if you're getting 3% yield, okay, inflation, whatever you want to call it. But like if you're earning outsized, over just raw vanilla ETH, like there should be some risk there. It's not just, so I completely agree.
And I think like if you tie it back to like DATs and yield, like I keep hearing people say like one of the huge selling points of DATs is the yield.
Yeah.
And I'm just like, I don't know, man. Is it like if you're long like a 90 vol asset is like the 3% of like,
it's not even real 3%. Yeah, it's like 40 bips, less like 15 bips. Well, if you were to actually, this is another thing. If you were to actually look at ETH as a currency, like the way with bonds, right, that we determine like real interest rate is we take like the yield and then we take out like inflation and then you come to like your real interest rate, like obviously duration and all this stuff, but like that's what you're looking at, right? Like that's the real yield.
Yeah.
if you're doing the same thing with ETH, like you should subtract out inflation.
And I think these guys know that. Like there's like
but it is disingenuous. Like,
100%. Like Tom Lee knows he's paying taxes on that yield and it's not efficient. And like there's just you know, he's like 1.3% after all said and done.
It is, but like just to the broader point, yes. Like if you are if you're investing in an asset that you're hoping goes to 60,000, is the marginal 2.8% yield going to be the selling point?
Although to tie it back though, like you want to say no to that, but like look at everyone who did deposit with like Celsius and BlockFi. Like people in crypto are just fucking addicted to yield. Like people want yield.
I've been on this. I've been on this forever.
And I don't know. It feels like you're talking to like an 85-year-old retiree.
I know.
They just love to see they love the idea
of compounding or something.
But they also love the idea of like constant compounding every second. They're like checking their D-Bank every 20 minutes. They're like, oh shit, like my ohm is like it's rebasing.
Well, that's what got us onto it. No, I think that's actually a good point. I think what originally like had us all salivating about yield was there was a time when you could farm. I mean, I remember it. I was doing it, farming stables on Pancake Swap for 10,000% APY. And what you got in rewards, you could stake and it was going up.
Yeah.
Cake went from like $3 to $50. I'm like, dude, this is an infinite money glitch.
Yeah,
this is so easy. Yield does matter. This is sick. Like,
so I think people internalized that and like took that as a real lesson, unfortunately. I don't think it's not like a bad proposition of like, hey, I'm going to take my Ethereum and I'm going to like put it in DeFi and make it active. I just still don't understand the economic argument as to why I should buy it through you.
I think it is, there will be somebody, I mean, functionally, it almost definitionally must be that there's somebody like, there's a greater pool in the future who will.
Yeah, you're going to bet on MNAV expansion and someone to take
that's the only rational explanation.
That's what the guys that are doing the pipes are thinking. I mean, they're right. I mean, they're correct in that example.
That's the other reason that I just don't think that, like, for how much hype there's been around DATs, it's, I don't know. I've done like an episode with Joshua Lim, who's like structuring a lot of these. I love him. I'm just laughing that like he's behind the scenes and facilitating a lot of these. But it is very hard to look somebody like anybody who's not an insider and tell them that these are good ideas at all. Like, and that's why I should have say like, I have no edge in this. Clearly I have no edge. Totally. I'm not getting invited to these deals. Apparently everyone's getting invited to these deals. I am not.
Yeah,
I am not. So the pipe investors, like they seem, I mean, I was asking him about that and I was like, dude, like what are the multiples that these people who are getting in on like the ground floor, like what are the multiples they're getting? And if it's ever like 10x or more, or even 5x or more over 3 months, like, dude, they're gonna let go. Like, they're gonna like, come on, right?
They're not true believers.
So yeah.
I also just think like, one, it's like been talked about to death, and like I just don't think it's that interesting.
No,
like,
it's not.
Like I'm super like cynical, but I genuinely find a lot of stuff in crypto like intellectually stimulating and like pretty interesting and fun to think about. DATs I've just found like they're super boring. Like it's just there's just nothing. It's nothing new about it.
Agreed. The new part is just that it's a new marginal buyer.
Yeah, we just took like shitty financial engineering that like people talk about.
So yeah, but okay, let's expand on one more point about this. What we were talking about prior with Saylor, and again, this has been going on for 5 years, and this doesn't really dawn on people like how much this has already. Well, specifically, Saylor started issuing equity, and then he started issuing 4 more increasingly exotic derivatives to the point where he's now at functionally a Athena-like stablecoin, like a algo-ish stablecoin that kind of has like a lower bound on its depeg. But that's where he's at already. I'm wondering like. This is kind of pertinent because we were talking about like the most recent Solana DAT. Like, do you expect these type, having some background in TradFi, like, do you expect these types of like exotic derivatives to be issued against DATs like this? And if so, like what would be the rationale for somebody wanting to buy an algo stable issued?
I don't know. Like it's like I don't know. I think there's one Solana DAT that issued converts. I think so, right?
Okay.
But I don't remember what the size of the issuance was. So like one, that's like an issue to begin with. Like the issuance needs to be big enough for like a convert arb hedge fund to like be interested, right? So like that's why it worked at Saylor size. I don't think that like the market appetite is there right now. I also think like you can kind of use the heuristic of like if there was a market for convertible crypto debt, like Saylor would just keep issuing. There's no reason
exactly.
Like I don't know why. If the market was open, Saylor would never be like, I'm not interested in tapping this market. And some Solana DAT's like, hey, I can tap it. To me, it's always like he's going to eat up all the capacity. And if there's anything remotely left over that he can't fill for God knows why, then someone else would do it.
That is basically what I was thinking as well. Unless somehow the story is told that there is real cash flow being generated on chain. And I mean, I guess like I saw somebody tweeting yesterday that one interesting again, I think actually you responded to this tweet. It was something along the lines of like, maybe one interesting aspect is being able to move TradFi money on chain in a kind of a, indirect way. I am like, again, not an expert on this, but eventually I understood like, oh, okay, so there's all of these hedge funds and endowments and institutions that want more exposure to Bitcoin, but they simply cannot within their mandates, and Saylor figured that out. Maybe the premise is that
I think that's just like I think that's very not true now. Okay. Like 2020, the idea of like you couldn't get exposure through your mandate, definitely a real thing. Now, I mean, I don't see it. Like a lot of family offices are like being pretty aggressive, like in the direct asset. Endowments own it. I don't really know of anyone out there that's like, I really want to get my hands on this, but I can't do it. So like no one's a buyer of MicroStrategy in like huge size anymore because of that.
Let me take a moment to talk to you about Ellipsis Labs, a team I've known for a while building some of the most interesting products in the space. The Ellipsis team is one of the few that I can consistently point to and say, these guys really know what they're doing. They're backed by Paradigm, Electric Capital, and Han Ventures. The founders, Eugene and Jerry, have experience at Citadel, Jane Street, and the Solana core team. Since launching their order book DEX, Phoenix, they've done over $80 billion in trading volume by making on-chain order books competitive with centralized exchanges. They are also the team behind Gavel and SolFi. I would consider them the foremost experts in crypto market microstructure. The best part is Ellipsis is hiring for New York-based engineers. Work with a small, focused team who are results-driven, collaborative, and use a modern stack. If you're an engineer who wants to work on infrastructure that's already proving itself in the market, go to ellipsislabs.xyz. Okay, now back to the show.
Okay, so that actually brings up a slightly different topic, which we were talking about before. One of the interesting things that I guess I kind of learned, maybe I already assumed as much, but I kind of learned more recently, having like spoken to a good number of VCs. I would say this is more within the past year, is that their books are really not benchmarked to Bitcoin anymore. And the rationale is that Bitcoin is this macro asset. Anybody in the world has access to it through ETFs, through strategy and all of its various derivatives. Direct access to Bitcoin now has transcended that of the cryptosphere. Ideologically, I may have some reservations with this, but let's put that aside. Yeah. Like that seems to be a little bit one of those like pick and choose what you want to, totally tell your LPs. But regardless, that does seem to be LPs are investing with that understanding now. That's my understanding, is that like a lot of these funds are getting LPs saying, look, we're allocating towards a riskier, different type of investment. Now, this is what's fascinating about DATs, and what I was thinking about recently is like, okay, we now have a bunch of Bitcoin DATs. We have numerous ETH DATs. We have coming online soon a number of Sol DATs. We have Sui DATs. We have a Story DAT. We have a Hype DAT.
Don't forget WorldCoin.
At WorldCoin DAT. I'm kind of now at the point where I'm kind of curious, like, do you think that VCs are going to have to start talking to their LPs and be like, yeah.
So like, it's actually something this is like very inside baseball of like traditional hedge fund allocation. So like institutional investors are fucking obsessed with benchmarking. this is like, we need to know what we're benchmarking against. Like, you're an equity long short fund. What's your benchmark? You're multi-strat. What's your benchmark? I've always been surprised. And like, this is mainly just my own ignorance. Like, I'm just candidly not really in like the VC crypto community at all.
Yeah.
I don't know how their institutional LPs, so like personal LPs, like writing checks, totally, I get it. They don't care. But for like an endowment writing a check to like a crypto VC going forward, I think they want to know like, what's the benchmark? And I don't know what the answer is, because like Bitcoin, I think to your point, like, it doesn't really make sense. Like, I am kind of sympathetic to VCs. Like, it doesn't make sense to it. From your view, probably
it from my view, it is, because I'm like, I don't need to go. I'm going to go. I'm going to crash out over this.
I'm baiting you a little bit.
You are, because I'm sitting here and I'm like, Bitcoin.
But then that's almost reductive of like, don't even bother investing in the asset class and like just buy. It's the same. So I'll put it this way. It's like a different flavor of it. Like, you don't invest into a hedge fund to beat the S&P 500, right? You want like a risk adjusted return, right? But you still benchmark against the S&P,
right?
Now, VC, you can say like, are you doing that with less volatility? I don't know,
right.
That I guess is the most like charitable point of like, you can underperform Bitcoin, but like, if you do it in a different way, like I do think it's valuable. Like, I would like to allocate to like a quality VC who's like doing the seed deal of Athena, like in the bear market. Like, I think that's a talent. Like, I can't do that myself.
Yeah,
I don't have those connections.
Like, I know, I agree. I guess my thing.
I definitely didn't think I'd come on this podcast and be a VC defender. So
no. I just think that. Well, I think I come at like it from a much. First of all, and this is a very real and relevant bias, is that I don't allocate other people's money. Like, I allocate only my own money, and I don't even do that much in the way of like allocation. And the reason there is a reason for that, which is that I really do, and this, so this is like pretty ideological here, but like, I really do think like the opportunity cost of almost anything to me is Bitcoin. Like, I approach it like that. So like, when I go and invest, if I'm going to invest like what I would consider to be size in my personal portfolio, it's like, what do I think the return is going to be above Bitcoin? Now, if I'm degenning with you guys in the trenches, this is a totally different story, right? If I'm like putting, 1% here, 1% here, like, this is different. But like, I really do think like the opportunity cost of money now to me is Bitcoin. Now, I could be wrong. It's still clearly a risk asset. Like, I'm not like.
Do you think of that? So this is a question I always ask people. Like, are you thinking of that solely within the confines of crypto? Because like, I can find a ton of different like mega cap assets and be like, why is if you're using that line of argumentation, why is your hurdle not like Nvidia or like something else? Like what makes this different?
Because I do believe in the vision of a store of value, like monetary asset that like should in the long run. I was having this argument with Tolly, and I think it's just like quite a difficult kind of conversation to parse, but I really do think like in my idealized world, in the long run, like if we get into some type of like Bitcoinized world, when you go to invest, like your hurdle rate is Bitcoin, but Bitcoin is just neutral. It's just like you can just save, and you're not going to necessarily increase. Like it's not really an investment at that point.
Yeah.
It's just money.
It just exists.
It's just money. It's like the hurdle rate, right? It's like the zero cost of capital or whatever. Like that to me is like the vision. Now, of course, right now when I'm talking about like hoping, to see Bitcoin as $100 trillion asset soon, like, okay, a 25x is not what you expect from a currency, right?
Yeah.
So like, it's a bit different, but like, that's why I think it's fair to ask, why not Nvidia? Why not the S&P 500? Like, you know what I mean?
Back to, if I frame this as like what LPs and VC funds are looking at, like, I definitely think from their perspective, they're going to a VC and they're like, all right, this is like very TradFi. Like, I have my allocation pie and I'm going to you, crypto VC. I want like my super risky frontier venture stuff, and I want that from you. I'm going to go buy Aave myself.
Yeah.
So like, there is like
I think that rationale is fine. I guess my point now is, why aren't they? So are they going to be going to their VC, their crypto VCs, and saying, I'm going to buy the ETH ETF myself?
Yeah, I see what you're
saying.
See
what I'm saying? That's the only that was the only point I'm making. And with all these DATs, like with increased, now I guess one thing, DATs are clearly not an exact 1-to-1 analogy for ETFs, right? They're what we're realizing are basically like actively managed degen funds potentially. Yeah. So it's not really fair to say that buying this new Sol DAT is the same as buying the Sol ETF when it comes on and doesn't have these weird like.
I would be willing to bet like over a 5-year period, it's probably the same or materially worse.
Yeah,
if you were buying the DAT
for sure. Exactly.
I don't like. I can't. This again goes back to our previous conversation. I don't think anyone's going to repeat the unicorn of Saylor and like do all these funky weird things in perpetuity.
I think your point, like I think the most like poignant thing, and I completely agree, is that if all of this, outsized demand for which supply has not caught up for these exotic, beta to Bitcoin derivatives, exotics, like all of this stuff, if that existed, Saylor would be hammering them. Yeah. So I think that's a really good point.
And I also think like what people are setting themselves up for disappointment too. And like, this is just like a pure market structure thing. Like people forget like how poorly ETH was trading like 5 months ago. Like it was bad, right? It was really bad. And as someone who like, I was long a lot of ETH. It was bad. Oof. And then Tom Lee brings it to an all-time high, and I'm like, sold all my ETH. I was like, great, I'll sell it to you.
So I saw you tweet that.
Yeah, and I was like, honestly, like I felt stupid for holding all this ETH throughout it, and like honestly, I'm not going to make the mistake again. I own none, and like purely, it's like you wonder, like, and this is not what I think is a novel like point. Like, what if we already priced in a lot of like this, and it's done? Yeah, right.
I don't want to say it. Yeah. No. It like, I won't make too many incendiary comments, but like it does. You can just. It's like almost a like Ansem tweeting about like just a gut feel. Like it's almost like there's like this gut feel that surely there's diminishing returns from here, right? Like so it's impossible to deny.
If we're gonna get to this point of the conversation, I always say this, and like it pisses people off when I say it to them. I'm like, the way like my mind has kind of thought about the entire market for the last like year and a half is like we've done pretty much nothing since the end of 2024.
Oh yeah,
like exactly. We actually just haven't. Like you'd think we've done like a lot, but we actually just haven't. And we spent like we had like that short period from November to December, and it was like, okay, it's time to price in like every good thing in the fucking universe is going to happen. And we priced that in. Every good thing in the universe happened, and we're kind of like a little bit higher on the price, right?
Yeah, I mean,
like generally, like from like a market.
I think that's right. Yeah,
from a market structure.
I think we priced in all of the okay, so my kind of view is that we priced in all the non-money printer go burr narratives, like with the Trump and like positive regulation, just all of these corpo chain, like all of this, like, so 100%.
I think if you told people like 2 years ago all this kind of stuff was going to happen, and you told them what the current like market price and like valuation things were, they would say you're crazy. It's much higher.
Yeah, I completely agree, because but maybe this is just like sort of the higher bound before we turn the money printer on, like this, and I hope that the thesis of money printer going burr is going to be good for us. Like, I don't know.
Yeah.
I mean, you think that's all priced in too? I'm getting out if you think so.
I mean, look, like I hate to be like a market prognosticator. I've candidly, like, this is obviously not like a macro podcast. I've never like leaned into the money printer go burr thing like too much. But like, I do think people in crypto discount how efficient markets are at like actually pricing things in. So like I went back and forth with a lot of people on like the Sol DAT, and like, I'm sure every single person you talk to, like, this thing has been rumored for the last like 2.5 months, right?
Yeah.
Like not even rumored, just like fucking obvious.
And also they just had to, like, you look at their biggest competitor ETH and they see Tom Lee and it's just like, oh, you guys have to do this. Like, it's obvious you guys got to do this now. And so like Mert and Tolly and Kyle and Novogratz and like all of them are like, all right, what are we gonna do? Right?
Yeah, we gotta do it. But that is one thing. Like, I think Solana is just, the entire ecosystem is so much better coordinated, and they can paint like a narrative together. Like the Ethereum Foundation is never going to sponsor a DAT. You know what I mean? Like they're all.
Although Lubin, I get, but no,
you know what I mean. Right. Like true thought leaders. Like, but I digress. Like previous point, like, people are like, oh, why is Sol not moving now? Like when Galaxy was like, the DAT was like ripping yards into it. It's like, okay, now they have Sol at basically like market price now.
Right.
It's like, okay, like everyone
Right.
just front run that. Like that's how
Right.
markets work.
Right.
And people still think like, oh, it's crypto markets, it's like a new frontier. It's like, yeah, but like the people that are in crypto now, like I hate to break it to you, are like very sophisticated. Right.
Yeah.
And I don't mean me and I don't mean you. I mean like
I know.
people that are like actually moving markets, they're
Right.
very sophisticated.
Yeah.
Like they know how to price this stuff.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
Correct me if I'm wrong. Are you pretty big Hyperliquid bull? They're like, what? I see you tweeting about it.
Yeah, I like it a lot. I definitely didn't use it nearly as much as I didn't use it that much, mainly because like I just don't trade perps.
Neither.
So like I farmed it with like HLP and I got like a decent airdrop,
Yeah.
but like nothing crazy because I just don't think I have any edge trading perps. So like I kind of self-selected myself out of that, which sucks a little bit.
Same.
I think it's awesome. Like I think it's I guess the only, I mean, if I want to give like a cynical take, because I think that's like the entire point of this podcast, is I kind of do sometimes go down a dark hole and I ask like, what's the point of Hyperliquid? Like just build a box. Like why do we have, like why do we even bother pretending that it's like a decentralized exchange? Like just like straight pipe it and put it in a box and that's fine. You know what I mean? Like I guess I just don't get the end. It's an awesome product, but like I don't get why it even needs to be decentralized, and that's kind of like my core ethos.
Well,
like
it doesn't, and it's not really. But I know what you mean.
but I feel like it's in that weird like kind of tweener in between space. Like it's obviously not Binance.
Right.
It is like decentralized to a degree, but like
I think it's close enough to Binance that then you can say it's no KYC.
Yeah.
It is close enough. And there's like, at the end of the day, what I realized, because I've been on your side about this I think I went down like an MEV rabbit hole I still am, I follow roughly, but like I was like really trying, because what I thought at the time, and back in like the bear market when none of us had anything to do, and everyone was going mechanism design, and I was like, okay, I don't come from an HFT background. I don't really come from a trading background, but I come from, I think, at least some common sense. Okay. And my common sense told me that if having all these nodes distributed around the world that all have to come to agreement on the order of a ledger at the same time was the best way to trade.
totally. Yeah. Totally.
That we would have figured that out by now, and that NASDAQ would be like that.
I just think proof of stake is stupid to begin with. Like it's like why bother? Like that's my point of like just build a box.
Right. And so, but I think that ironically, and I was kind of having this discussion with Tolly, and I don't know, like it's so hard. He's a little bit, we're both like a little bit out of our minds, so it's hard to tell like if either one of us really understand the point we're trying to make. But I was like, what I kind of realized is like Solana is not the best way to trade assets. It's clearly not, and I don't really buy the multiple concurrent leader. I don't think there's a way to.
Well, so like let's take this to like the natural end state where like it's decentralized NASDAQ, everything's there. It's like, okay, so like Citigroup over there is going to have a massive validator,
exactly,
and then Goldman's going to have a big validator, and then but then it's like, okay, like what is the fucking point?
And you know what? I'm going to say it, like maybe the whole composability thing. Now, does that give the chain a tremendous amount of value? I don't know. Like I'll put that aside, but maybe it's a composability thing. But for the time being, people are trading on it. Like people do push real volume. I mean, okay, maybe not relative to like NYSE, but they do push real dollar volume through Solana. And at some point, you kind of just like have to accept that. And I made this joke. It's like, why are we using a blockchain? It's like, well, because that's where we stuck all the assets. You don't have to overthink it. It's like a bunch of people can spin up wallets with like, no KYC around the world. Everybody can access it. It's open 24/7. Maybe that's enough. I don't know.
I don't think anyone cares about decentralization anymore.
Nah, I don't.
I know. I care about it for like Bitcoin. Like Bitcoin,
I care about it for Bitcoin too,
silo off my Bitcoin.
I care about it too for Bitcoin because I genuinely think that there is some level of decentralization that Bitcoin necessitates, or it really is worthless. And I'm fine with saying if it becomes centralized beyond that point, it's worthless. Like it's pretty simple. Like if your transactions start to get censored, if you can't easily spin up a node on like a shitty computer, it's worthless and it's fine. It's all it is a bunch of like, computers around the world. It just doesn't exist, right? Like, so it will be worthless, and I'm fine saying it's worthless. For the rest of this stuff, it doesn't
and I used to think, like, I initially thought like, Hyperliquid, no KYC, fine, but I genuinely do think now it is such a good product that people would use it. Like they shipped a phenomenal product that people are going to use regardless.
And they ship fast. And I have, so like, there's maybe 3 people on a technical level that I will go to and ask and be like, are these guys really actually what they call like cracked engineers? Right? Because I don't like, when I say that, it just sounds derpy because I have no idea. The guys who I talk to who know the Hyperliquid guys, every single one of them say like these guys are extremely competent.
Yeah, for sure.
And so I'm like, okay, that's impressive because I don't know, right? So I need like somebody else to tell me, like, are these guys like, are they actually pushing out like an incredible product? And they're like, yes, they actually like, for what they have been able to do, it is.
And they also don't talk, which makes you even more bullish about it.
They just shut up. So I think Hyperliquid's really cool. I have no edge in trading. I know I have no edge in trading, so I don't care. I'm like similar. I didn't really farm it, like, but it's become such a big phenomenon. You really can't discount it. But
it's probably like one of like 2 crypto assets. I would literally probably just say Hype and BTC that like I'd be totally comfortable just owning and walking away.
And also, I was always extremely skeptical of tokens, and I think for valid reasons. And like now, the Hype, like the way Hype works is very intuitive, and it mirrors something like we have in TradFi, which is so right now they're doing buybacks, right? But this is like could easily be equivalent to a dividend,
and I think you also have like you have like as close to an ironclad social contract with Hyperliquid of like they're going to do that. Like I don't know, like I don't know how you quantify that, like how you price it into your model, but like they're going to keep doing that buyback come hell or high water.
100%.
Like, that's just going to happen.
I also think that it was smart to turn on that buyback printer very quickly, because to me, a lot of crypto this is a weird way to say this, and we were just talking about like it's pretty centralized, but like crypto protocols applications, like a lot of times when they're out there, they are much closer to being a finished product than I kind of say this, and I don't know that this is entirely true, but like, for example, like Apple ships a new iPhone every year, and I guess you could say that the iPhone's been the same thing for a long time, but like I guess to me it seems like Hyperliquid's like 90% of the way done almost, and it's just a matter of onboarding new people and
like getting new assets and
new assets, and then like small fixes, like they probably won't ever be able to compete with the latency of Binance. You know what I mean? Like I'm sure they can make their code a little bit faster, but I just think that when like a lot of crypto upon first launch is like 90% of the way there, unless you completely pivot your project, which I guess happens a lot. But like, so I think it's smart to instill very quickly this idea of like, this is going to generate money. The way this, the way you should value this is because we make billions of dollars in fees and we're going to buy it back.
Totally.
And I agree about the social contract too. It's like as close.
It's not going to get broken. Like if it ever did get broken, I mean, I don't know. I feel like it would be bad.
I mean, the best way for it to be broken would be that they just start, instead of buying back, they just start issue like a dividend.
You send USDC to your wallet.
Exactly. Like just distributing fees.
There's no way they're going to keep
That's the most likely version of yeah, I agree. Okay, what should we finish? Okay, wait, we'll finish it. How much time? How much? Okay, we got some time. But you are like constantly trolling about Celestia.
Oh my god! All right,
what is it about Celestia?
So it's actually funny. So I missed the airdrop for Celestia. I wasn't even paying attention. I qualified for it, and then like I found out that I didn't get it. So sour taste initially.
Okay, so at least you're exposing your bias.
I never really I remember I bought a bunch of Celestia posts for the airdrops.
Second reason you hate it.
Yeah. I'll segue into I don't think I actually hate it. I think it's just a fascinating project. Like there really hasn't been anything like it that had such an insane community when they airdropped everybody. It went absolutely fucking bananas. And every single person under the sun was like, this is the next coming of Christ. Like DA is going to be the future. And I think anyone like that was seriously interrogating it was like, wait a fucking second. Like this math is not mathing. Like, dude, like side tangent, like there's days, I don't know who sent me this chart. There's days where like literally non-blob fee transactions, so just sending Celestia generates more revenue for the chain than like actually people posting data. Like it's really wild. And, you know, like I was just fascinated by like this whole proof of governance stuff that was suggested and like this battle that's going on like in the governance forums. Like I hate going in governance forums. Like I sometimes will lurk in them. Yeah. And like someone pitched this trade to me of like Celestia now, whatever, $1.80, $1.90, I don't know where it is now. Like it is either going to continue being inflated to zero, like it's just going to happen. Like the issuance is like way too much, unlocks are way too much, just going to zero. Or they can like actually get their act together, or like move to this proof of governance concept, change the entire like issuance dynamic, and like maybe put the project back on its legs. And, you know, that was my own personal campaign to tweet at Nick White every single day. I think I gave up. I got a little bored. I was doing it for like a solid month though. People enjoyed it.
To get them to move to a proof of governance.
Yeah, like I was just trolling Nick White because it's like, it is like...
So wait, have they transitioned to that?
No.
Okay. The idea with there was like just to basically constrain the validator set to like 100.
Yeah, and like there's no reason to be paying what they are in inflation. It's just like why are you doing?
And they bought out
yes, that's like a whole other thing.
Yeah.
But it's just like it seemed to me like I don't know any of those guys. Like I'm screwing around half the time, but like it just seems to me the quintessential like the project is just fucking off and like people made a lot of money. Yeah. And like no one cares.
Yeah, I haven't really followed that closely with regards to the tokenomics, to be honest. I guess my thing about Celestia was that, okay, so like let's say there's like 100 different, like there's a broad spectrum of outcomes, like 100 different possibilities from Celestia goes to zero and ruins the world up to Celestia becomes the DA layer. It is
say the word modular money. You know,
exactly. Modular money. It becomes okay. So like my thing from the beginning was like I didn't think that like structurally it could ever be worth what. I didn't think it could ever really be worth like a venture scale outcome. I just don't.
So you didn't invest in Eigenlayer at $30 billion?
No, exactly. Like I did not. I mean, I was trolling restaking like very, very early on. Like this was like a big thing for me, right? And like, but I didn't really actually. I followed the Eigenlayer stuff closer at the beginning than the Celestia. I just didn't. The like DA is a commodity. Like okay, that's one way to say it. I think it is a slightly reductive way to say it if I'm being nice, because there is a difference between alt DA and DA, like that blob space. There is functionally a difference. Now, does this matter?
How do you quantify that? Yeah.
It does, more than likely doesn't. Would it surprise me at all if Base started using alt DA? No, like and unaligned to themselves, whatever.
No one cares.
Like, exactly, no one cares. But yeah, I never like. It didn't really make sense to me that this could ever, even if it hit modular money, I didn't think it was worth 50 billion. Like even if it became modular money, I didn't see the outcome, because I'm like, you would have to basically like, I guess one way you could come to a valuation is like, it could take like 500 billion valuation for ETH. I don't know what it is today, but like, let's just say it's 500 billion. And you said that in this nebulous, unquantifiable valuation for ETH that the market says is 500 billion, let's say that 100 billion of that is a function of it being a DA layer. Like not the revenue it generates from blobs. Obviously,
just a percentage of its market value.
Yeah, exactly. And it's all screwy, but like you could come to some ridiculous, thought and say that what like 100 billion of the 500 billion of ETH's market cap is a function of it being a DA layer. Now, DA layer number 2 comes in. Okay, what percentage of that do we think we could steal, right?
So on and so forth.
And let's say we could take 50% of that. All right, you could come to $50 billion that way. Again, this is a rudimentary model I'm making up on the spot. My rationale from kind of the beginning was like, no, you can't.
Yeah,
you cannot.
Yeah,
you can't take 50%, and it's also not like ETH's DA is maybe worth $5 billion. Okay. And you're not going to steal so I just never really thought. So I don't know. I didn't really look, I mean, the tokenomics didn't seem great. It doesn't seem great that staked, like, just like take away all the little specificities of this. It doesn't seem great that that lock tokens can be staked at very, very high rewards. Like,
well, that's why crypto is great, and I love crypto so much. It's like sometimes the simplest answer is most often the right one. For
right.
Like Celestia, it's like, well, there's a lot of inflation and like there's a lot of people selling it, and I don't really see any structural buyers, so it's probably gonna go down a lot.
Yeah.
and a lot of people had that thought like a long time ago when it was like really high, and they were totally right.
Yeah, and I mean, like, so I don't even care. I never cared that much about tokenomics. I never even really could discern whether or not the tech was really good. Like, maybe the tech is really good. Like, maybe it actually is like a much better DA layer. Like, I don't know, but I just still didn't think that it could ever. Like, the outcome was never like asymmetric.
Totally.
To me, it was like, there is no asymmetric outcome here.
Yeah.
Okay, so we got Celestia out of the way. All right. You have like a lot of thoughts on Athena. You've been like, what's your
I feel like you talk about it a lot with people. Like my thought on Athena is, I think, a bit more nuanced than people. Like, I think it's actually a very, very cool project.
It's a good idea.
I think it's awesome. It's an awesome idea.
It's a good idea.
I actually really just like, I'd say 99% of it I got like no problems with. I think it's more on like the back end. And I wouldn't even call it like a huge problem. I just think it's kind of a weird design that the market's like coalesced on. Like Athena, at the end of the day, like it's a very simple hedge fund strategy, and like you're wrapping it, right? And like I don't want to go back and relitigate like it's a stable coin, it's a stable dollar. Fine, it doesn't matter. I think you're probably sowing the seeds for like an issue down the road with like the preponderance of looping and the huge proportion of TVL on Pendle. And how like literally every single person you talk to freaks out about like upcoming maturities on Pendle PTs, because like Athena just makes up like such a huge percentage of their total TVL. And like we were talking a little bit before we started of like how many borrow lend protocols just hard code USDE to Tether. And this goes back to like our previous question of like everything in crypto, if you're getting an incremental yield to it or like an incremental return, like there's some risk you're taking, right? Now, like people that go out there and say like, you know, Athena is UST, like it's dumb, stupid, like dumb comment. What I think is a more interesting line of argument is like, okay, what are the scenarios that cause Athena to depeg like 5% or like 10%?
Yeah.
Which is like a totally reasonable thing, right? So like their custody setup is like great. Like Guy and their team did an amazing job. Like everything in spot.
I'm a big fan of Guy.
Yeah, like everything,
on a personal level.
Yeah.
Like
he's super smart.
Yeah.
Everything is stored like third-party custodian, like nothing spot sending on exchanges. Amazing. But like crypto markets have this like weird way of like just breaking in very weird ways that no one can predict.
Yeah.
And like I don't know how it would happen either, but like you can certainly imagine a scenario where like some degree of like their perps position breaks somehow.
Like they're all live perps positions, and one exchange gets
so like one exchange gets whacked, and let's just say in like the fog of war there's like a 5% depeg. Like not the end of the world, like totally, like, you know, you can bring it back eventually, but like the amount of times that like USDE is looped on Aave, or like how much leverage is built up in Pendle, like that argument, I think, to like an Aave supply side depositor of like, hey, like everyone knows this asset's impaired right now, but like Aave is treating it as good debt because we pegged it to USDT.
Yeah.
Like I don't think that really flies. I think you can maybe make the argument that it's okay to prevent like, hey, a flash liquidation or like someone like kind of taking advantage of a depeg for like 2 seconds. I get it. But like if you're sitting there and like USDE is actually depegged by 5 cents for like 10 days and Aave is just telling you it's good, set at $1, like I think that's setting you up for problems.
Yeah. Yeah, that makes sense. I'm sure there's a lot of like, there's a ton of leverage built up in that.
Yeah, and I don't think it's like it's by no means a systemic risk. I think it's like a super cool product. I think it's interesting, but I just think like the same thing with anything in crypto. I think like people lend too much against it. I think like my general ethos is like anywhere and like any borrow lend protocol, I think the LTVs that people like that protocols give are way too high,
especially when the assets are commingled.
Yeah, it's
like,
all the same
especially
thing.
Yeah. Like I think, but like especially when there's like in the curve situations, like so
totally.
That was like so like elucidating for it's like, wait, why is this one guy able to almost wreck all of DeFi according to the
Those were fun. That was a good bear market experience. That was fun.
Yeah, exactly. And then I'm like, wait, why is curve like essentially treated as equal collateral as BTC and ETH. Not literally, but like functionally, why is it allowed to have such a systemic risk? And yeah, so that makes sense. What do you make of like the idea that, okay, interest rates come down? We won't go into the whole money printer to go birth thing, but like interest rates come down and people start gambling again. And
I think that is the very elegant design of Athena.
Yeah,
like I think that's right. I think it
sounds right.
It sounds right to me. I think again, to previous point, like the super middle of the road take, it's like a company like Circle is like probably screwed, right? They probably always were screwed, but now even more so.
Yeah. You think Circle, like, yeah, what do you make of like Circle stock? Just like grossly overvalued?
Yeah, I just like don't think it, I'm not a fundamental investor, but like one, I just don't think it was a very interesting business to begin with. I don't think that they have like the technical chops to like really expand and create something like brand new and innovative. Like I would put Tether in the same bucket as MicroStrategy of like they're kind of like their own thing. They've created this like amazing, beautiful, small ecosystem, but Circle's not that, I don't think.
I agree.
I think it's like nice TradFi beta, but like that's kind of like a flash in the pan type thing.
Yeah, I mean they basically funnel half their revenue to Coinbase.
So that's interesting. I know we don't have a ton more time, but I think like if we're talking like Hyperliquid and USDH, like I think that is going to be.
Yeah, what do you think about USDH?
I think it's awesome. Like I think it's like it is so great that people are no longer just allowing stablecoin providers to just
take 100% of you. Yeah.
Like maybe it's not 100%, but like it's probably like a split. Like your product doesn't exist unless we use it.
Right.
And it's a great, like guys, Hyperliquid, like, wait a second, like why is there, what is it, like 10 bill on the bridge, something like that of USDC? I don't know what it is, but.
And I think it matters more in the scenario of Hyperliquid, it is much more viable for them to do that because this like whole composability building blocks is a lot less relevant in like a siloed perp exchange where people are there to be.
They just want cash.
Exactly. Like they want some confidence in when they close a position, it's a legitimate dollar, but like outside of that, they have no reliance on Circle. It doesn't, I mean, the whole hyper, VM thing, like it's in its nascent stages. They're not reliant already on Circle in the ways that like, I don't know this necessarily, but like Base may already kind of be in cahoots with Circle for.
And you probably, as Hyperliquid, you probably feel way safer with like native markets controlling your stablecoin than you do
For
Circle.
sure.
Like if you're thinking like 5 years down the road, who knows what the regulatory regime is? I think native markets is far less likely to blacklist your bridge than Circle is.
Exactly.
It's like it's kind of a no-brainer to me.
Yeah.
I don't really care about like the drama. Like I totally disinterested in that, to be honest. I think like that's how crypto works, to be honest. Like that's how all deals are probably done.
Yeah. Yeah. The whole drama was. It's like one of the few. It was like one of the few interesting things to talk about. That's why it definitely got some people like up in arms about like why even facilitate a governance proposal.
I think it's like obviously that's what happened. Like like obviously like probably native markets was like.
Well, I guess the claim was that people did not expect a degree to which all of these issuers were going to come and like give these.
Crazy incentive. We'll give you 110% of the revenue.
Exactly.
Yeah.
Like we will.
But I think it's awesome. Like if you're Hyperliquid and like you need to think about this from like a selfish perspective of them, like do more of it. Like you are fighting for your own protocol and in exchange like you're fighting for like
I think it's very
hype token holders. Like great, do it. Like no more like kumbaya stuff. Like like these margins should be razor thin. Like if I'm them, I'm gonna extract everything I can out of a stablecoin provider
for sure. All right. Well, I think we covered a lot.
It's fun, man.
Everything.
Yeah, we did.
We got hit on all the points.